Okay, let's have a little look at pivots.
Wait. Matron, take them away.
And a warm welcome to one and all. Your first time here, big fella. That is the Scruffy trader. And it's Friday. I'm ready for the weekend, but I'm also ready to try and give you something. And that's what today is all about. So let's jump straight into it. On the Telegram, flip this over. This is free, by the way, guys, where we all have a little bit of a chat. I set it up so you can be protected from dickheads that are out there. It's all clean chatting here. And the idea is no selling signals, nothing like that. It's just guys having a bit of a chat. So, all I do, a little salute to you. Asked about pivot point and moving averages in conjunction with support and resistance. Now, the only way I actually know how to do things like that is to put it into real terms. So what we'll do is we'll strip all of this off and I'll build this up, and then we'll put some pivots on and I'll show you how to read it. And if there's a trade, well, we'll put a trade on as well. But if not, then we'll show you the criteria. Right, first thing I would do is look at a daily chart from yesterday. So if I widen this out and I put in what's called daddy levels. Now, daddy levels are the key points from the day prior. So it'll be the lowest point the market has been to, the highest point the market has been to. Then you want the open and close, which is the baselines of the bodies, which is here. But there is actually a fifth level, and it is the midpoint. Okay, now it's not a tested level, but you want to know where the market is. Is it in the top half or in the bottom half? Okay, so if I just get a measuring tool and go from there to there, where you can see that it's the midpoint is pretty much, put that in a dotted line, where to open. So it's actually trading quite high. All right, so that's the first thing I would do. Now what this is give us is a boundary to work within. You've got trading arenas to work within. Now the next part of the puzzle is a moving average. Now, if I put two moving averages on here, and what we're looking for is a 21 and a 14. Doesn't matter about the colors, guys. It's just so you can see them. We can see on the daily it is trading up. Why is that? Well, because if I just quickly flash that back on, you can see the faster one is above the slower one. All right, so that's a good point. Right, let's drop this down into something that's tradable. So we'll look at the 4 hour. What we are seeing is you can clearly see the upward move, and you can see this is showing you it's up as well. So you've got 2 time frames that are telling you that this is up. Good. All right, so it's kind of give you a bias, if you like. So let's come down onto the hourly. Again, there is the cross. We are trading between this section and this section. Let's pull this across here, as you can see, and we're up. So, okay, I'm quite happy with that. Now I'm going to change these in just a second. Now we're going to drop on a pivot point. Now this is a daily pivot point. You can have it set in different ways, like weekly, monthly, 4 hour, etc. But I find the daily is probably the best. And it is set to a high, low, and a close divide by 3. All right, standard settings, which is all you need. And then what we're looking at is there's the pivot. This is resistance 1, which happens to tie in with the high of yesterday. Okay. And then as you move up, resistance 2, etc. Okay, so what else can we do? Well, let's just move these moving averages out of the way. We had a sustained drive yesterday. So if I put on a fib, just to sort of reinforce this, which is there, what we can see, well, there's your 50%, there's your 61, which again has acted as an area of interest, as has the 76, which again lines up with the level. So naturally it comes up to here. So actually there's another point we can work to. Here. So now what we've got is reinforcement. Right, so if I just drop these in off this hour, and this was based off a single move, which is there. Drop these in. Just like so. Happy days. That is there. Right. Now the rule of thumb with a pivot is quite simple. If it opens above the pivot, it will try and get sometime within the working day to R1. If it opens below the pivot, it will try and get to S1. And what they stand for, R1 is resistance, and then resistance 2, which is up here, and then down over pivot, which is support, support 2. Areas of interest. Okay. So what have we got here? What can we see? Well, we can see a strong drive up. Hasn't got there. It's holding above this. It is relaxing a little bit, which is fine. So how would you trade it? Now you've set all of this up, because you can see you've got nice areas to work to. And your higher time frame, your daily and your 4 hour, they've told you this thing is moving up, just using 2 basic moving averages. It's telling you what the inertia of the market is. Now we're down onto the hourly, which agreed with those 2 time frames, that it is pushing up, and you can see it. It's holding above the pivot. It is holding above these areas of interest, which are created from fibs. And we have a target point of R1, which happens to line up with the top of here. So that's going to be a bounce point. So we're going to bounce from here to here. Simple stuff. Drop it to 15 minute. What have we got here? Well, now we need to work out what our target points are. Well, if this is relaxing, which it looks like it is, I want to see if I've got 10 pips somewhere. Well, if I know that that is the target, kind of want to allow for the spread. So there, this point, I draw a little line on. There, that's my last point of entry. If I get in beyond that, I'm going to struggle. Okay, so really I want to be getting in down here somewhere. That would be nicer. So how else can I do this? Let's have a little look at the moving averages again. Except this time, what I'm going to be doing is I'm going to do away with those 2. And I'm going to add in a trigger line, which is at 8. Just like so. Get rid of them. And what I want is the price needs to be above this. Okay. So we're above it here. You can see this moving down. Let's see what the 5 minute is. Now we can start looking at trigger points. So it's now underneath this. So that's telling me to wait. So how else can I start shoring this up? Because what you got to remember with a moving average is, a moving average is very lagging. So if you're using it as your trigger point on your 5 minutes, sometimes it can be a little bit difficult. So your candles come into play. So you either wanted it kind of above this, but there is another way. So if you come back to your 15-minute and think about this, as long as it's above on the 15-minute, chances are it's going to come down and bounce. So you can actually have an order sitting here and wait for it, or you can trail an order. All right, let me show you how to do that. First of all, we want some criteria on this. Again, we're going to go to our fib. Now, there was a strong move there which collapsed up here. We know they come back to 50, so that would give us probably this line here, which will be there. Okay, it's coming into now. Let's go back to our fine. Remove the 8 just so I can see it's clear. Right. It's at that point. So this candle here is the trigger. See how it's stalling at this point? So it can stall there, it can stall down here. So what I suggest that we do is, let's have a quick look. If we drop an order on that candle that's playing out just now, on the top of it, there we go. Right. So we've got a buy order on the top of here because I like candles to come to me. So as long as on the 15-minute this stays above the 8, I have a level here that I can work with. I can also put an order down here for it to bounce into, sort of pick it up, because I think that'll hold. And if not, it'll catch this. So the price is sandwiched between the two. I've made a decision that I want to go along. So let me do that. And then whichever one gets triggered first will be what we go for. Okay. So there we go. All right. So what I have now is, we know we go on to roughly this point here. Pull that down. There we are. Okay. We are pretty much looking good. Yeah, get rid of that. And then I'll quickly talk you through what we've looked at. Okay. So we started up here. And what we did was we created a trading point of view, which is the low, the high, the open, the close, and the mid. That gave us some areas of interest. Okay. We also put some moving averages on to see what was going on this high time frame. It's telling us it was going up. We just confirmed that by dropping it down onto a 4, see what's going on, give us our sort of first stage trend, if you like. Dropped it into an hourly, which agreed with the higher time frames. So that gave us the trend. We knew we were looking to go up, and that's all we were interested in. Then we were looking at the pivots, just here, to see how they are performing. Well, they are in the upper quadrant and they haven't hit the R1, and it's a reasonable assumption if it opens above a pivot, it will attempt to hit the R1. Okay, so that was agreeing with the deeper trend. We then placed on some Fibonacci points based on this move here. That gave us some areas of interest, which we can see it's respected time and time again. So if it is breaking to the upside, the next point is here. So that's what we're looking for. And we want the price slightly south of here, just to give it some punch. But we also measured out where our last point of entry is, which is on the 15, which is here. So we need to get into the price before here. And down here, we started looking at good bouncing points that it might get to. So we sandwiched the price between them. And now we're going to follow this down with a 5-minute. as you can kind of see here. That's closed up there. So I don't mind this coming up, picking that up and then running. I genuinely don't. But if it runs down, there's a high probability of bounce here. And then we're monitoring this on a 15-minute using an 8 EMA is our barometer. Now the barometer is, as long as it stays above the 8, it means that the action is still running to the upper side. If it comes underneath on the 15-minute, there could be a bit of a dynamic change and we have to wait. So at the moment, this trade is all nicely set up. This here. Then you can use these Fibonacci points and sort of levels and pivots as places to put your stop. Simple stuff. So they've got structure to hide the stop behind. We've all got structure in order to get in and give you a good price. So if you were chasing the price, like getting in here, you might have thought you're doing well, but now it's changing. But there's a high probability it's going to bounce here. Why is that? Well, we've got a fib and we've got a solid level sitting right here. Okay. And then if it moves all the way down, it's going to find its way down onto this pivot. But as long as it's above this pivot, the pressure is that way. So that's the play. That's what we're going to do. I'll just let it run out and we'll see if we can... Well, what we'll do is we'll set it for an easy target. It's Friday today. So just, I don't know, 10 pips. That'll do. Onto, maybe he's there. All right. So happy days. Happy days. Might adjust it as we go. We'll see how we get on. But if it hits that, I'm fine. And why? I don't want to put too much at risk because I've done quite well and I'm pretty much done for the day. I thought I would do this to help you. So let's play it out, see what happens. Okay, boys and girls, all done. Just in time for lunch as well. How good is that? So what have we done here? We've built up a chart using pivots, fibs, and basic trend. Now, within it, what it also does is give you opportunities to build up a position, which is what you saw me do. Because I knew where the pain thresholds are. The maximum pain threshold is down here, but the real one was this. So I was quite happy to stage in down to around here and then make decisions here before it did the bounce. Catch the wave coming up. Each time I saw some form of a stall, took a little bit out, moved the stop up so it protects the account. And then you just ride it up. And it's paid me quite well. In fact, it's paid me very well. So this section here is what you've seen done off that single trade idea. And pivots is incredibly powerful. They genuinely are, because they help guide your structure. They help guide your trade. Unlike this one here.
Which one?
You.
What am I doing now?
Nothing. She's winding you up, Milo. Winding you up. You're doing well with the coffee. Because we all know Scruffy likes it coffee. And he does. He's got it in his Forex mug. And this video is sponsored by Winky. And if you like mugs like this, drop in the description below. You'll find her shop. Anyway, enough of the self-plugs. That was a good trade done. So in hindsight, all I'll say is look at the higher time frames. See how good they are. In other words, see if there's a trend. If there's a trend on the high time frame, confirm it with a middle time frame. If them two are in alignment, your pivots can then help guide the boundary point where it's going to bounce, whether that's to bounce you out of the stop or get you to the target, and work between the 2 points. Quite simple, you know, trend, structure, target, and just be sensible. When you're day trading, that's why you saw what I'm doing here, in the sense that I build up a position, but I build my positions backwards because I'm normally wrong on the point of entry. It's very hard to get your entry perfect, you know, and that's why I say I don't look for the bottom third, I don't look for the top third, I look for the bit in the middle, and that's what we've just got. So as always, guys, trade well, keep your risk managed, but above all, what you love, and the money will follow. See you all in the next one.